Video, we'll talk about trade-based money laundering, uh, a basic concept, some common methods, challenges, red flags, and effective approach to mitigate trade-based money laundering risk. If you're watching this video or you are on our channel for the first time, please subscribe for more videos on email and KYC concepts. And if you have any questions or feedback, please share your comments. So what is trade-based money laundering or TBML? Trade-based money laundering primarily involves the import and export of goods and the exploitation of a variety of cross-border trade finance instruments. Trade based money laundering takes advantage of the complexity of trade systems where the involvement of multiple parties and jurisdiction make email checks and customer due diligence process more difficult. Now let's understand uh, the definition of FATF. uh, Trade-based money laundering defined by FATF as the process of disguising the proceeds of crime and moving value through the use of trade transaction in an attempt to legitimize their illicit origin. Now, since we understand what is trade-based money laundering, so let also understand some common methods through which uh, trade-based money laundering is being done. So one of the uh, common method is over invoicing. The exporter submits an inflated invoice to the importer, generating a payment that exceeds the value of the shipped goods. So by representing the price of good in the invoice and other documentation stating it above the true value, the exporter gain excess value as a result of the payment. Another common method is under invoicing. So here, exporters submit a deflated invoice to the importer, shipping goods with greater value and transferring the value to the importer. So by misrepresenting the price of the good in the invoice and other documentation, the buyer gains excess value when the goods are sold. Another concept is multiple invoicing. The exporter invoice multiple time for the same shipment, transferring greater value from the importer to the exporter. By issuing more than one invoice for the same good, a seller can justify the receipt of multiple payments. And this is harder to detect if the colluding parties use more than one financial institution to facilitate payments or transactions. Over and under shipment. The exporter ships more goods than previously agreed with the importer, so thereby transferring greater value to the importer. Alternatively, exporter ships fewer goods than agreed and transferring greater value to the exporter. Misrepresentation of goods. Goods shipped to importer are misrepresented on official documentation as being of a different from actually shipped, so thereby transferring greater value to the exporter. Phantom shipping. No goods are shipped and all documentation is completely falsified. So now let's understand the trade-based money laundering with the help of an example. So a Colombian drug cartel smuggles illegal drugs into the United States and sell them for cash. And the drug cartel used the cash to buy a scrap gold in the United States, which is melted down and recast into gold bars. And at the same time, the cartel ships lead bars, which is uh, not that costly, from China to the United States, and which are invoiced as bars of gold. When the shipment arrives, the lead bars are destroyed and the recast gold bars are substituted. So, with authentic documentation, the gold bars are sold on the open market and the money is wired back to China and then eventually to Colombia. So here we can easily see the drug cartel choose to minimize the risk of detection through the use of falsely described shipment of goods. The shipping document associated with these falsely described gold bars were used to legitimize the sale of gold bars in the US. The receipt from these US gold sales were then deposited into the banking system and sent back to Colombia. Now, let's understand the key challenges and issues in trade-based money laundering. So, custom authority or equivalent collect and manage trade data and do not have the authority to conduct a money laundering investigation. And it has been seen that trade related data available with custom authorities used for other purposes other than detecting TBML, and therefore a lot of information is not available with the investigator. Another in trade based money laundering is there is no current standardization with regard to practice of collection and maintenance of data on TBML. And it has also been seen that there is a lack of clear policy and inconsistent approach to risk assessment with no specific trade finance money laundering risk assessment being done. Another key challenge is lack of awareness and training on trade-based money laundering on training among trade processing staff. So trade processing staff do not make advocate use of CDD information gathered by relationship manager or trade sales team, and sometime inability to demonstrate that money laundering risk had been taken into account when processing particular transactions. Another key challenge is inadequate systems and control over dual use goods. It has also been observed that there is absence of systems capable of cross referencing trade and trade finance data, lack of reliable statistics relating to trade based money laundering, very few cases of trade based money laundering being reported. And another key challenge we have seen is over 50% of reporting jurisdiction seek information from international counterpart. So there is a highly dependence on other parties, and it has been seen that requirement of maintaining confidentiality, delay in responses, conveying of information with restriction will further complicate the whole investigations. Now let's also understand some of the TBML red flags. Currently, we are talking like few indicative list, but we would be preparing a separate video on red flags. So let's understand the first one, the discrepancy between invoices and the description of goods on official document. And it also been seen that quantity of good sometime exceed the known capacity of shipping container or tanker or other vessel. Uh, Shipments are paid by third parties which are unrelated to the transaction. And apart from this, payment sometime made to the beneficiary account held in a country other than stated location. Sometimes there are unusually favorable payment terms such as interest rate far above the market rate. Shipments are routed through number of countries or unusual transshipment points. So that should raise an alarm, because it may happen that the vessel is also like uh, moving to a sanctioned country and then completing the shipment. So that should raise an alarm. Another important point I would like to discuss is involving amended or frequently extended letter of credit. And this may be a case of multiple invoicing that need to be investigated. Also, like sometime it has been seen that in letter of credit, the true value of goods transferred between countries can be masked through misrepresentation of price, quantity, and quality. Customer inability to produce appropriate documentation. And I think this is like one of the red flag in even in KYC and EML, where customer is not providing the appropriate documentation. And that would only suggest that client is hiding something, and it also leads to a odd client behavior. And then sometime client may be requesting an unusual degree of confidentiality, not providing clear answer to routine commercial, financial, technical question, and approaches from an unknown third party whose identity is not clear or convincing. So now let's also understand what should be the effective approach to mitigate trade-based money laundering. Although efforts are made while performing CDD on customer to understand the customer line of business, address, the country the customer trades with, the trading routes used, the goods traded, the type of trading partner the customer is doing business with, and location, the role and location of agent, bank, and other third party used by the customer in the transaction, checking sanction list published by US Department of Treasury and comparable governments. A rigorous approach of monitoring trade transaction is important. Some of the details will emerge during the CDD process, but other will require specific attention. Uh, like for example, clear and specific email policy and procedure for trade-based money laundering risk assessment must be in place, which allow bank to identify transaction that pose higher risk of money laundering. For some countries, good and type of business are higher risk than normal, and staff need to know what they are. These risks must be monitored at various stages of the transaction. There should be a comprehensive list of uh, warning signs, a red flag for staff to look out for. Some of them, and I think some of them have been discussed in the previous slides. Trade transaction need to have a description of goods and services covered to ensure they comply with the government regulation, export control, AML requirements, and other institution specific policies. Therefore, letter of credit which merely cite a purchase order number, a contact number, a performa invoice number, or corrective acronym are not sufficient and require investigation. Another important approach would be access to trade data and trade finance databases to the investigator. And it has been seen that data is dispersed over more than one agency. Therefore, it would require cooperation among various authorities and also international cooperation to share data should be encouraged. So apart from these approaches, bank can also join one or more of the industry or professional group that deal with trade-based money laundering issues. They are valuable source of information, news, and advice on uh, trade-based money laundering and provide useful forums for discussing the problem. Seeking the views and experience of others is essential when creating and maintaining an email program which is specific to trade-based money laundering. So thank you for your time today. I hope this video would help you to understand the concept, challenges, and how we can effectively tackle the trade-based money laundering. Thank you so much. Have a nice day.